My next guest, he gave you a late Christmas present. Remember, he said you got to have exposure to silver. So let's bring in Osaic Chief Market Strategist Phil Blancato. All right, Phil. Now, there's a lot of schools about there. Like, why is it moving? Why is it moving? Some say it's the end of the world. Gold, silver, the dollar debasement, the end of American exceptionalism. It's the end of the world. We told you it was going to happen. Some say, no, it's just industrial demand. Also, Bloomberg saying it's China buying. And then, of course, there's some folks out there, anytime anything gets hot, they call it a meme play. Yeah. What do you call it? You called it sort of before this major takeoff, though.
It's really quite simple, emblematic by Japan. I mean, you have the whole world at this point not being able to get their debt under control, whether it's us or France. That's the tip of the spear. Beyond that, there is industrial demand, solar panels, batteries, and so on. And then finally, there is demand from it from the retail public, really jumping in here and pushing it significantly higher. So you have a combination, but it starts with.
So let's start with this, the fecklessness of government debt, government spending. That's never going to stop. I mean, if we're honest with ourselves, that's never truly going to stop. We've talked about the cliff for maybe 2 decades now. Feels like we'll get there, but if that's the case, does that mean gold and silver keep going higher?
It's hard not to believe there's an opportunity to own these things even here, because just look at the United States. Social Security looming in 2031, it's going to run out of money. We're right now we'll have $10 trillion in debt, has to be refinanced in the next 6 to 12 months without a much higher rate than what they were issued at. So you have this problem with this debasement continues, and what's the antidote? The central banks around the world are recognizing they have to be in gold and silver.
All right, so on that note, you also gave us AEM last time you were on the show. You could see this big spike off the 50-day. I assume you think this still has more room to go.
240s at the high end. If you've made some money here, it's not a problem. Take a little bit of profits, but they've got $1.2 billion in untapped reserves of gold. They got to get to them. But the reason why I like this 89% earnings growth, it's the other play besides just owning the metal. See, I don't love just owning the metal. The synthetic options have their issues with them. If I'm owning pure metal, that's fine. But the options trade I don't love. That's one way to do it and get a much cleaner play into gold.
One thing that's kept you bullish over the years, and even when the market was shaky, is the consumer. You always point to the U.S. consumer. We got the consumer confidence number out today, and it was an absolute unmitigated disaster. Yeah. Are you concerned now about the consumer?
Not at all. I think these numbers, I've never loved this stuff.
Right.
People vote with their politics. They vote with the headlines. The surveys. Right. It's just not real world. Real world suggests to me consumer spending is strong. Wages still higher than the rate of inflation. And we've seen costs come down a little bit on CPI. And then most importantly, we see right now the unemployment market is fine. If no hire, no fire means we just don't have stress at the consumer level. We spent $260 billion online sales alone in the fourth quarter. Consumers not fatigued. All
right, let's talk about some ways to make some money. You already mentioned Agnico Eagle. Hold on to it. If you want to nibble, take some off the table. But for the most part, a lot more upside. Discard I think, therefore I am. Yeah. Okay. What's the deal with a great name of the company? What do they do?
They do a variety of different things. They're in a cloud space to start with. Not to mention they have a software program that allows them to control the data that's in the cloud. I think that's what makes them a very interesting and brand new kind of company. It's doing something completely different.
Amazon got a downgrade today from a reputable firm. It's been a laggard. You like it here as we head into earnings season?
I just think what they're doing in the cloud arena, what they're doing with data storage, is second to none. At the end of the day, I still wish the company would split. It's much more about what their cloud services are than their retail side. But I just think they continue to put up parabolic numbers. They are the leader in data center and storage around the globe. And I think that's what makes them such.
And you can definitely argue the risk reward is there, right? It's so cheap compared to its relative values.
Exactly.
Before I let you go, there's a lot of wild cards floating around out there. A couple things from SCOTUS, Supreme Court. Can President Trump fire Lisa Cook? What's the deal with tariffs? The next Fed chair, the geopolitical developments out there, potential government shutdown at the end of the week. Do any of these for you really bother you, make you change what you're doing in your portfolio?
See, that's where people make their profound mistakes. Never let those headlines affect how you invest. At the end of the day, GDP fourth quarter, maybe as much as 4.4%. We know the third quarter numbers were exceptional. Spending hanging in there, wages hanging in there, employment hanging in there. And by the way, everybody got a tax break on January 1st. Is going to get this really wonderful $1,000 or more tax break going into this year right now.
Right.
It tells me we're in much better shape than giving credit for, and the market's emblematic. But what you're seeing is the broadening out is actually real, whether it's international, small caps, other companies with better valuations are a way you can make some money right now without having to bet on Mag 7 that are expensive.
Ignore the soft data, surveys, focus on the hard data and the momentum.
Exactly.
Hard data. Good stuff.
See you, buddy. Thank you.